I'm letting the I'm letting the participants in right now.
Yeah,
Tanushree, you can start in 30 seconds.
sure. Good evening, ladies and gentlemen. Today we are gathered here for a
Tanushree,
yeah. Good evening, ladies and gentlemen. I am Dhanashri Gavankar, and today we are gathered here for a knowledge session on 5 years of GST compliance in association with BDO India LLP. I would like to begin the session by inviting our regional president, Mr. Saurav Shah, to formally welcome you all. Mr. Shah is a corporate advisor and a company law consultant. He's the CEO of Universal Business and Corporate Services Center, a business consultancy firm which provides Indian and foreign companies with wide range of business solutions and compliance-related services. Apart from being the president, he is also the chairman of Ease of Doing Business Committee at IICC West India Council. With this, I hand it over to Mr. Shah for a welcome remarks.
Thank you, Dhanashri. Greetings and namaskar to all the dignitaries and the participants. I welcome you all to today's knowledge session on 5 years of GST compliance. I would like to thank BDO India LLP for partnering with us. Friends, before we begin with today's proceeding, please allow me to share a few words about Indo-American Chamber of Commerce, which has a legacy of more than 50 years. We have a membership of around 1,800 companies, which primarily include US companies operating in India, as well as Indian companies having business relations with the US. And these companies operate in different sectors and industries of the Indian economy. We have our outreach in the United States of America through 14 MOU partners, which are based out of different provinces in the United States. And again, these MOU partners are also chambers and industry associations. So we address and adhere to a larger stakeholder, a group of larger stakeholders through them. As a chamber, we take up initiatives, programs, both at micro and macro level, which will contribute to enhancing trade and investment between India and United States of America. ISCC, as a catalyst body, would like to ensure that we have events and programs which will also provide business opportunities to our members at B2B level, while we address a lot of macro issues, both at the Indian level as well as at the level of United States of America. Coming to today's topic, friends, 5 years ago, India's federal and state governments struck a historical deal. From July 1, 2017, a uniform tax on goods and services marketed by Honorable Prime Minister Shri Narendra Modi as one nation, one tax, one market. Uniform taxation across the country has gone a long way forward, making India a common market. Logistics and e-commerce have benefited apart from checking evasion, real-time data on supply chains, promises to help small firms access low-cost financing. The last 5 years of GST have seen many changes in terms of policy, tax rates, and procedural and technological overhauls, which have completely changed the face of the indirect tax system in India. The industry has done an overwhelming effort to ensure the adoption of the ever-evolving GST law in the last 5 years. As a chamber, we felt the need to organize a digital session with a prominent knowledge partner video to encapsulate the entire the domain of GST over a period of 5 years and presenting it to our participants in a capsule form in terms of what those changes have been and how they have to be applied there. So without any further delay, I would like to certainly once again welcome all our dignitaries and participants for today's session. And I'm sure We will have a great learning from the experts who are going to talk on the technical subject and explore the benefits of GST and let us know their point of view. Thank you once again for joining this digital session.
Thank you, Mr. Shah. Now I take this opportunity to introduce you all to one of our speaker, Ms. Payal Thakkar. Ms. Payal is the partner with the Indirect Tax at BDO India, with over 17 years of experience specializing in GST, pre-GST laws, customs, and foreign trade policy related matters. She has undertaken indirect tax advisory and compliance services across various industry verticals and has advised and assisted clients in setting up operations in India. Payal has handled SEZ and STPI related advisory, compliance and implementation related matters on various clients. She has extensively handled GST advisory and implementation assignments with marked clients. She has been actively involved in advising clients on litigations and representations and has contributed to various publications and has also been a speaker for various tax topics at several forums. With this, I hand it over to Payal for a presentation.
Thanks, Dhanashree, for the introduction. And I would like to thank Saurabh, Vishnu, and Dhanashree and the Indo-American Chamber of Commerce to give BDO this opportunity and partner with BDO to have this knowledge session on the most favorite topic of all tax consultants and as well as the industry. Like Saurabh mentioned, GST was a dream that came true, as in we have been very fortunate as a generation to witness this one of the largest tax reforms of the country. We all know that India is a federal system of taxation. We had that, and every state had the power to collect taxes and to kind of use it in the manner that they thought was right for the state. There were multiple taxes and which created, cascading effects, whether you were a manufacturer of service or manufacturer of goods, a trader, or even a service provider. While we say this, we went through an entire reform where we did constitutional amendment as a country. We developed one of the most robust technology platform that any country can have. And we together as a nation could see this biggest tax reform where we are having now one tax, one nation, and truly it is there. With the kind of volume that India has as a country has, and the kind of industries and sectors we function into, it was definitely a daunting task. And we still went ahead and implemented GST in the best possible manner. But yes, it required substantial improvisation. And over the period, over the past 5 years, sorry, I think I'm yet to share my screen. Over the past 5 years, we as a nation and with the support of the government, by way of issue of notifications, circulars, and improvisation of the technology platform, have kind of ironed out several creases that the law had. But while we speak and discuss this, how far we have come, half a decade into GST, there are still issues in the compliances that we as an industry do on a regular basis, month on month, as well as there are certain open points or challenges that we face while interpreting the law as it stands today. While we speak on these issues, myself and my colleague Karthik will take you through these challenges that we face on the compliance front and what are the open issues that we together as an industry and as a government together work jointly to resolve it. The earlier compliance system had, if you were a service provider, was very simple. You had 2 returns at every 6 months and, you had a centralized return concept. As a manufacturer or as a trader, of course, you had to obtain registration at multiple states and do the compliances monthly or quarterly or half yearly as the case may be. But come GST, everyone, was at par, whether a service provider, a manufacturer or trader. You had to obtain registration state-wise and pay your taxes and do your filings accordingly. And also there were 2 returns that needed to be filed every month. That was GSTR 1 and GSTR 3B. Apart from that, there was GSTR 9 and 9C, which was an audit report. Now, while we say this is happening smoothly so far, of course, with initial hiccups because of the robust technology platforms. But there are still certain challenges while we do this compliance. For example, we went the e-invoicing way, and we've like everybody above a turnover of 20 crore today is on the e-invoice path if you're into a B2B kind of a scenario, business to business. But if you see the GSTR1 today gets auto-populated through the e-invoice portal. But if the data there is incorrect and if it doesn't match with your system, you will have to delete that and refill your GSTR1. But when you do this, your invoice reference number gets deleted and you cannot input that again, which is again a challenge, because then when you go back and try to map it with your system, it doesn't happen. Also, the GSTR1 that is there on your portal, it's in a dynamic form, which gets updated at a regular on a day-to-day basis. So again, mapping that with your sales register on a month-on-month basis is a difficult task. Also, sometimes there are technological glitches because of which what your e-invoice portal shows and what gets reflected in the GSTR1 is, there is a difference in that, and it's not possible to reconcile that. Also, the summary return, which is your GSTR3B, though it's quite informative, but again, it's a summary return. It doesn't allow you to kind of plot your rate-wise details there. So, when you have to go back and see whether your GSTR1 has like 4 items at rate 12%, 16 items at, 18%, you don't get that bifurcation in your summary return. You will have to go back to your GSTR1, you'll have to go back to your invoices to check that. Also, if there is a negative amount, which you need to reflect because there is something which is excess, which is gone in the last period, that you can't show in your GSTR3B. So how do you address those issues? Again, reconciling your input tax credit, which is of course at a summary level and a 3B, but you have your GSTR2A and 2B, which you have to map with. And if there is a mismatch, your credit kind of goes for a toss, and also it's additional burden for the assessee. The other challenge that you have for both these returns is that there is no provision to revise those returns, which was there under the erstwhile law. And this becomes a big challenge because if there is no revision, you have to wait for 1 whole month for the rectification and amendment. And it can be done only in the subsequent return, because of which there is always a challenge to kind of keep a month-wise control of your financials with the returns. So that's a big challenge that we have as an industry, which we are facing. And this is what the industry is looking at, maybe something to amend the returns, because then it will make life a little more smoother, a little more easier for all of us. I think the biggest challenge that we all have faced in GST, of course, it's a very good system which has been improvised over a period of time, and you have 2A and 2B, which shows the vendors who have been compliant and have filed returns and makes you eligible for the credit. But while we say this, the assessee is being the compliant assessee is being penalized if the vendor is not filing the returns. His credit, or that business credit, is getting impacted if the 2A and 2B don't reflect the correct picture, or the 2A 2B does not reflect the compliances by the vendor. Again, the new GSTR 2B, which has got introduced from January 22, that is also static. So if somebody does a compliance, if your vendor does a compliance after a certain period of time or your due date, that doesn't get reflected in that 2B. So again, that defers the credit for an eligible assessee, which kind of is a cash flow impact or a timing impact, but it definitely has an interest element added to it. Also, originally when the GST got introduced, there was going to be a GSTR2, which was going to be auto-populated on your system, and doing all this reconciliation would have been done. But that never went through, and this were a stopgap arrangements of 2A and 2B, which came to us. And because of which there is an additional compliance burden on the assessee. Also, the GSTR 9 that is there, the annual return, of course, we say that it is a, consolidation of all the monthly returns. But while we say that, the actual format in which the data is expected in GSTR 9 is very different from your summary 3B return or a GSTR 1. If I may take one small example, while we are taking ITC, input tax credit on intellectual property right and IP related to software, you cannot, disclose it together. You have to have that bifurcation in GSTR 9. Also, the capital goods needs to be disclosed separately. So it does not even give you an option to kind of disclose, if you have paid tax to DRC 03. So these are the challenges which the GSTR 9 as a format has, because it is not in tandem with your 3B and 1. Also, there are certain information which needs to be disclosed as an assessee, which you expect your annual return to have. That also option is not available. So if this minor tweaks and changes are made and revision of return is allowed to an assessee, it will kind of reduce the compliance burden, because I know as a consultant, from 5th of every month to 10th of every month, all my team is engaged, and so also my client's team. And again, from 17th to 20th, the team is almost 10 days in a week, in a month, go in that compliance. But if we address these issues, I think this burden will substantially come down. It will kind of make life easy for all of us. And also, this is not the only reconciliation that you need as an assessee. You also need to reconcile your e-way bill and e-invoice, so there are multiple levels of reconciliation that you have to do. And thankfully, there is a robust system, but there's a long way to go, because we are also learning as an industry, as consultants. The system is improving. But yes, together, I think if we kind of place these challenges or address this kind of highlight the challenges which we are facing at a ground level to the government, I'm sure it will be it will get addressed like the other issues over a period of time, and we'll see the ideal GST format. Of course, there is a new 3B which has come now and which has been introduced by the government, which is a positive move. But while we're saying that, there are still a couple of challenges which are there. Like now the ITC needs to be detailed significantly in your summary 3B return, where, first, originally, you were only supposed to highlight the ITC that was eligible to you in your summary return. Now you need to kind of put a consolidated number for all the ITC, then reduce your ineligible ITC. Also, you have to bifurcate. It's not enough that you only highlight the ineligible ITC. You also have to highlight the ineligible ITC on account of 17(5), which is your restriction under the input tax credit provisions of the law, and your restrictions because of your place of supply. So if you're not eligible to avail the credit in state A because the POS is in state B, that also needs to be reflected. So these are the challenges that this new format will also have. And addition to this, you also have to highlight the ITC which you are not eligible to take because of the time barring, that you've missed the timeline to avail the credit, and because of that also you need to disclose. So there are multiple levels of disclosures required here, and it's going to add to the pains that the assessee is facing due to the format or due to the way the disclosure is expected. There is also one additional challenge that has come in the new GSTR 3B, which has got recently introduced, is if an e-commerce operator who's selling through, a vendor selling through an e-commerce operator, and that if the e-commerce is required to pay GST under reverse charge, that also needs to be disclosed separately in 3B. Whereas a similar amendment has not come through in GSTR 1. So the marrying of the two returns is also not happening on a monthly level. So if that things can be addressed, it will be very easy for the assessing. Okay, this was on the various compliances. Now, I think for an assessing, the biggest challenge, which has been since the inception of GST, which has been kind of addressed to some extent, is the conditions on the eligibility of the input tax credit. First, you have to make payment to the vendor. you need to have an invoice. You have to have those invoices reflected in your 2A, 2B for you to become eligible to take the credit. And then, okay, this is something which is still manageable. You are also made responsible to ensure that your vendor goes and makes the payment to the tax authorities. So I remember that in the pre-GST regime, especially the state VAT laws, had a similar provision, which kind of mandated you as an assessee to ensure that the vendor goes and makes tax payment to the government. But also, having said that, there were judicial pronouncements which said that the government or the revenue authorities have to first exhaust their in-house mechanism and themselves go and find out whether a vendor of an assessee is compliant or not is the primary responsibility of the revenue authorities to go and check. But that burden has somehow, under the GST regime, shifted to the assessee, and the assessee kind of struggles to ensure that vendors, of course, it will reduce those assessees or those vendors who are not compliant with the law. They will get reduced business now because of this, but it kind of adds to the pain of a compliant, a good assessee. So that's a challenge. And I think one more issue, which is I think a very big issue right now, is whenever there is an advance paid to the vendor, okay, the assessee is not eligible to take the credit unless the invoice, the time of supply gets triggered and the invoices come to the assessee. So that's another pain point, because it again creates a cash flow impact for the assessee. So there are multiple conditions and requirements under the law which a assessee needs to adhere to be eligible to take the ITC, which the assessee very well deserves. Like, there are restrictions under the law, there are a lot of compliance related issues. Because of this, there is a break in the chain, the concept, the original concept of GST, that the entire credit should be available to the assessee. That goes for a toss because of so many multiple requirements and conditions prescribed under the law. I understand there have to be invoice requirements and return requirements, but some things can be made easy. Those things need to be kind of reduced or maybe addressed. Also, I think there are a couple of additional challenges on account of this mismatch of ITC with the register vis-a-vis the 2A and 2B, which gets uploaded on the portal. So before 2019, October of 2019, there was no matching mechanism only. There was no 2A, no 2B, and the two did not come through only. So what happens to a period prior to October 2019 when there was no matching concept? Of course, 2A and 2B also are not the two prescribed under the law, but still you have a mechanism to kind of do that matching. But before that, what happens? There have been notices coming. I know there are a couple of judgments which may come for our savior, but if some clarification comes to what happens to the period prior to October 2019 when there was no matching, how can it be expected out of the assessee to figure out whether the vendor was compliant in that period when there was no facility that the government had on the portal, and the assessing himself or herself was struggling to be compliant because there was a transition of the law? So how do you address this prior to? That remains a very big question, and I think some clarification or some circular in this regard will be helpful. There's also another challenge that if your vendor kind of reflects the invoice incorrectly as a B2C invoice, that also maybe kind of jeopardizes the chances of the assessee kind of availing that credit for no fault of the assessee. So those kind of amendments or revision should be allowed, so that the ITC in that very month on a dynamic basis, so that the ITC does not get held for another month or till the amendment happens in the next return. So again, the cash flow improves for the industry. I think third and the most responsible issue that, the assessee fee is very responsible about is go back and check whether a vendor is compliant. Like we discussed in the previous slide, you keep on checking your GSTR 2A, 2B, as whether your vendor has done what he or she is supposed to do legally. And that is something I think which is the biggest pain point in the entire GST law, which I think the industry is facing. And I think most of us on this webinar will kind of echo my sentiments that I'm having. So that's another pain point. And I've broadly touched upon the compliance related and ITC related issues. And while we say that, there are also, upgradation of the technology required. Of course, this is the biggest technology platform that any country has had because of the kind of model we are, and it has been successful. But if there are certain things which can be improved, sometimes the returns don't get uploaded. Sometimes, there is a mismatch in your e-invoicing in GSTR1, the data mismatch and all of that. If those things can be, and I know that, the government must be working on it, but if that happens, then we'll be in a very big win-win situation because the government will have all the data perfectly there, and we as assessees will also have everything on the portal. So that will be a great thing to have. Also, while we are moving towards the assessments and audits by the tax authorities, I'm sure most of us have started receiving notices, and the assessments have begun. It is important that together the assessees and the revenue administration takes cognizance of the fact that this is a new law, this is the first time assessments, so there are no aggressive ex parte of orders or denial of refunds, which we are already seeing happening. Denial of refunds for treating everything as a agency or an intermediary, and those kind of things should not happen ideally. In spite of, there are certain clarifications and circulars which have come through, these challenges are still there. Also, there has to be consistency across various states to kind of take positions, because every tax jurisdiction has its own interpretation of the law, which will kind of have divergent practices. And the dream of one nation, one tax may kind of get diluted because of all of this. The last point that I will want to take up is the open disputes. So there are a lot of open areas where, there is clarity required. Of course, the government has set up, there are FAQs on the CBIC portals, there are white papers there. There are GOMs which have been formed for rate, for online gaming, which are addressing specific issues. But there are certain open policies like, different divergent ARs coming, which are kind of putting the tax position or the assessor's situation makes it very difficult for them, because what position they should adopt. There are multiple views that are coming through. So like, for liquidated damages, whether it's taxable or not, notice pay recovery, whether it is taxable or not, how are cryptocurrencies going to be taxed, or how the online gaming, of course, we have a GOM which is kind of trying to address in the GST Council. Is it aligned to the global practices? How is it divergent? Are we creating a distinction between the various kind of games? How does the cost allocation from the HO to the various other registrations happening? Is the ISD mechanism correct, or the cross charge is correct? How do you treat an intermediary? Though there is a circular, there are still challenges where people or the revenue authorities are getting. So there has to be proper education around that, so that those orders which are not aligned with the circulars or the thought process that the GST Council and the government is having, that gets conveyed to the tax or the revenue authorities, and we don't have this unwarranted litigation. So it's important that, we at this stage only address that probable litigations or the probable pain points. In another few years down the line, we will be a nation which can, truly say that, it's a one nation, one tax with minimal litigation. And I will now request Karthik to take up, the open issues, which as an industry, all of us want to get addressed. So over to you, Karthik. And thank you everyone for your patient listening. I think we are having a Q&A session shortly after this. maybe we can take up those questions once Karthik finishes his part.
Thank you, Payal, for being so articulate and highlighting the challenges with respect to GST compliances. I would like to introduce you all to Karthik Solanki, partner Indirect Tax Video India. Karthik has an experience of over 19 years in indirect tax consulting, working across a range of industries in all indirect taxes such as GST, excise, VAT, customs, and foreign trade policy. Karthik has also advised the clients on various issues in setting up the business and assisted in compliance. He has undertaken indirect tax advisory and compliance services across various industries. And also he has contributed articles to Indian business newspapers and professional magazines, and has been a speaker for tax topics at multiple forums. With this, I hand it over to Karthik for his presentation.
Thank you, Dhanashree, and thank you, ISCC, for having us share our views on what are the key open issues on GST law. Now, I'll focus a fair amount on the day-to-day, all the compliance issues which everybody is facing. I am focusing on the issues where the industry is facing some different views from the government on what is the correct tax treatment of the transactions. And after that, I would also cover some of the important changes which one would want to see in policy. Payal, can we move to next slide? Yeah. So Payal did refer to what happens on a cross-charge mechanism when you allocate a head office cost to respective other locations. Now, why there is a need and what is this whole issue? This is one of the biggest issues for all the multi-locational companies, where initially for government, for service tax, it was all one single entity and there was no intra-entity service concept. When the GST got introduced, for ensuring the respective states are getting revenue on the goods and services which are consumed in the respective state, the law was envisaged as for each different registration, which is typically for each different state, it is deemed as a very different entities. And any service or goods which are being supplied by one entity to another entity, and which includes transfer from one location to another location, was subjected to tax. Now, that was mainly to ensure, as I mentioned, about how do you transfer the credits and how do you transfer the revenue which has been earned by one state, which should be given to them. This deeming fictions led to another provision wherein it so happened that there was something called as cross-charge mechanism. Now, in this case, it's so when somebody is working in a corporate office and which is like a corporate team, like a CFO, a CEO, MD, and various other CXOs. Now, the tax authorities are alleging that while they are working for the company, the activity which they carry out, that gives a benefit to other locations of the company, and that means there is a provision of service from a corporate office to another respective offices, and there should be a taxability. Now, this completely disregards the fact that an individual is not employed by a particular location, but he is employed by a legal entity, and he is bound to carry out whatever work they have to do for the legal entity. So this has become now one of the biggest pain points and challenge for the industry, with multiple notices being issued and investigations being launched by the tax authorities for the activities which corporate offices are typically carried out. And for that, whether there should be a tax which should be charged by the corporate office to the respective other locations. Now, this has become, as I said, this has become a big issue. This also carries a lot of other valuation issues as well. The another issue which the industry grapples with, if one were to say that there is indeed a service which has been provided, can one say that what should be the value of these services? Is it that when a common services are incurred at a corporate office, the common corporate infrastructure that goes on and benefits all the other locations, and that results in a only value of the services so-called so as being to be provided, or whether you also need to consider the value of the salaries which are paid to the employees. And that becomes another challenging issue. And the third dimension amongst all this is a input service distribution mechanism, which has been there in the GST, in the service tax period, that if a corporate office receives an invoice for service which has been consumed at multiple locations, as an example, let's say there is an advertisement carried out and the corporate office receives the bill of the ad agency, the goods are sold from respective states and manufactured in respective factories. So they are the ones who have received the credits. So all these credits are taken at corporate office and are distributed to respective other locations. Now that's another mechanism to ensure that each of the relevant states which have received the also getting the tax revenue for that. Considering the two different mechanisms, there is a reviews which has been going on with tax authorities in many cases insisting about asking to do a cross charge for the deemed services provided by corporate office to other offices, as well as to transfer the credits from corporate office to other locations via input service distribution mechanism. Now, this is one of the biggest issues, as I mentioned. What we understand is there is likely to be a clarification on this issue very shortly. And this is hopefully that will resolve all the issues. As a principle, I would want to see a clarification which will not refer to particular facts, but more focus on principles. Because if the clarification is focusing on a particular set of facts, we have seen the next level of disputes and debates saying that the clarifications are not applicable in this case because the facts are not what has been mentioned in the clarification. So that's the first issue, which strongly requires a clarification. Another issue is what is the meaning of agreeing to tolerate an act? Now, under GST and so was under service tax, there was a specified language which says that if there is a agreement to tolerate an act, you have paid something for that, then in that case, it amounts to a service and that should be a taxable. There should be a tax on this amount which you recovered for tolerating an act or if you agree to refrain from an act. Now, typically this was meant to cover taxable, to make taxable something like a non-compete exam, a non-compete fee, wherein I agree that I am not going to compete with you in a respective business for let's say 5 years. And for that, I am paid something different. Where I am actually agreeing to do something I actually do. There is an active work which has been done by. What happens is now agreeing to tolerate an act is being interpreted by the tax authorities to say that wherever there is a compensation received for any breach of contract, like for example, let's say a project was to be set up in 1 year and it takes 1 year, 20 days. For that, there have been always been mentioned in the contractual documents that there would be some liquidated damages to compensate the project owner for the loss which he has incurred. There is no service provider receiver relationship here. This is just to ensure that the project owner is compensated for the loss which he has incurred for the delay in commissioning of the project. The tax authorities are saying that this becomes agreement to tolerate an act, which you mean that the project owner agreed that I will tolerate that you commission my project 20 days late. Similar issue, and which is something which is more closer to home to many of the participants, is if you are resigning from your job, you are required to typically serve a notice period for effective and smooth handover of all your work and your duties, and to allow the company to find your replacement. If you do not serve the company for that notice period, the companies typically recover the salary cost for the period for which you have not served, which is known as notice pay, which is essentially again to compensate the company for all the disturbances, etc., which they have gone through due to you not fulfilling your part of serving the full notice period. Now, here also the tax authorities are saying that a notice pay is nothing but a recovery for agreeing by a company to tolerating an act of you not serving the notice period. And there are many other similar examples, like compensation paid for take or pay arrangement, compensation paid for getting out of a contract, number of those cases. Essentially a compensation. Now, whether the compensation results in a service provider receiver relationship, is there something where there is a agreement to provide a service of active or passive work which is being done? And that is what has been the issue. The tax authorities are very clearly going down the path that this is a service, and in service tax as well as in GST regime, they have been issuing notices. Now, in service tax, there have been multiple judgments which have, or at least up to tribunal level, which have said that liquidated damages are not a consideration for any services, and there is a service provider receiver relationship, and hence there should not be any service tax. Same way for notice pay, that there should not be any tax on what is the amount recovered for notice pay. However, in GST, there have been a couple of adverse advance rulings, and the controversy continues. Again, this is another issue where we understand that there is a likely to be a clarification issued very soon. And on that basis, hopefully the controversy should come to an end, because there is typically no provider-receiver relationship. And hopefully the clarification which is expected will go down that path, but we'll have to see. Another one is taxability of the employee secondment arrangements. Now, when you look at the multinational enterprises, typically the foreign entities second the many employees to any other country, any other employee entity in another countries. Now, that because there are some certain skill sets which are exist in the parent company, and respective employees are signed there. Now, when those employees go to respective entities, they practically act as employees of the respective entity. For the taxation of their income, they are treated as an employee. For labor law compliances such as provident fund, etc., they are treated as employees in India. So there is typically an employer-employee relationship. However, just for continuation of their social security benefits in the home country, the salaries are typically paid from there, and which is reimbursed from the Indian entity. While there have been number of judgments on this, recent, which have been all favored the SSEs to say that there should not be any tax on this. Recently, the Indian Supreme Court held that such transactions are nothing but a supply of manpower by the parent to the Indian entity, and there should be a tax. Now, this is a very recent development, about a month or so back, and one needs to consider whether the facts which have been considered by the court in the judgment and the ratio, whether they apply to them in the full or not. But this is again going to open up another Pandora's box, and there should be a clarification. Next is recoveries from employees. Now, in many cases, there are various recoveries which have been made from the employees. Now, this can be for facilitating minor services like conveyance from their home to the factory, for the canteen facilities which have been provided to them, some recoveries for insurance, etc., etc. Now, in many cases, this is nothing but a part of the recovery of the cost which employer recovers from the employee. The tax authorities have treated those recoveries as again a service provider receiver relationship, and also sought to collect tax from employers. Again, that's something which one needs to see based on the facts of the respective position, that whether there is a provider receiver relationship between employer and employee. Is there a service? The next one is something which personally is very close to me, that currently the law says that if you make a immovable property for if there is an immovable property which is used for making supply. Let me give an example. If you construct a mall and then you earn income by renting out the shops in the mall, and you pay tax on that. As per the current provisions in the law, the construction of the mall itself is not eligible for GST. And in that case, this is breaking the credit chain, which was one of the most important aspects apart from one nation, one tax, that there has to be a seamless credit chain. Unless and until I construct the mall, I cannot rent the shops, and I cannot, again, in that case, provide a service. So hence, should there be a eligibility of credit which needs to be determined on the basis of its functional use? Similar issues arise in construction of a port or an airport, that unless I construct a port which has a lot of civil work, there can't be a port service which has been provided. But still, the credits for construction of port is expressly disallowed. While there has been some judgments in the service tax regime allowing such credits, now this is also another issue which we should see some movement, and a strong representation is needed to allow the credits on such cases. If it's okay, I mean, if you can reject the credit on a factory building or something like that, but where the immovable property is directly used to provide outward supply, can you really stop the credit? And last one is the proposed restrictions on the claim of credits. I'll refer to a lot of instances and the restrictions on claim of credit. The way current budget made some amendments in the credit claim mechanism, this is becoming even more stringent, and there is going to be even more restrictions on claiming credit. Like, for example, if my supplier has a mismatch and he has declared liability of X but paid, let's say, 0.9x as a tax due to some genuine reasons, I will not straight away get credit from material purchase from all these suppliers, and this is really system generated, so you cannot get the credit. So those kind of restrictions have been proposed to be put in, and that is something which the industry needs to represent to get more clarity. Well, next slide, please. There have been many more issues which have been disputed and debated as to what should be the correct tax position on this. But these are some of the issues which have been on the more of towards the more applicable to general public, more generally applicable. Okay. Next, where you are looking at on the policy side, the another one is rate rationalization. Today, we have about 7 different rates in GST, right from 0.1% to about 40%, including the compensation cess. Now, that kind of defeats the whole purpose because more the rates are, more there are classification issues and challenges, which will lead to more disputes. So we should have less rate structure. The government is working towards that, and hopefully we will see very less rates, some let's say 2 to 3 rates in future. The next one is introduction of petrol products in GST. Now this has been something which the industry has been wishing for probably a year when GST came in. But till now, there is no movement on this. The exclusion of petrol products from GST is creating a lot of credit chain breakages, resulting in a lot of tax cascading effect. The next is setting up of tax tribunals. We have 5 years of GST, but even today, the tax tribunal has not been set up, resulting in a lot of disputes which are still yet to be adjudicated. Another issue is anti-profiteering mechanism. This was supposed to be something which was initially brought in for a period of 2 years, and it got extended for 2 years. Now we are hearing that this will get merged in a competition commission. I mean, the issue here is that there is no clear guidelines on what amounts to profiteering and till what time you want the government to govern what should be the tax rates, which the benefits which the company entities should pass over. So there has to be a clear defined period, and then market forces will take over. Another one is, next is centralized audit mechanism. I referred to the service tax regime wherein there were centralized or tax compliances. Now here, what is happening is that the industries which were service industries typically, they are asking for a centralized audit mechanism that where can the government carry out all the audits in one go in one location. I remember there was a group of ministers set up to examine this, but there has been no further movement. But if this is brought in, definitely this will lead to a lot of ease for the industry, especially the service industries, so that they don't have to run around in multiple locations for conclusion of audits. Next is investigations and focus of the authorities on pre-deposits. I mean, there have been many instances where we keep on hearing about long drawn investigations which run into 3-4 years and no clarity on where the investigation is going. Ideally, there should be some time limit defined for investigations. And secondly, there has been a lot of experiences wherein the authorities have been pressuring the businesses for making a deposit, whether they agree or not. And in some cases, even the courts have passed some observations on this attitude of the tax authorities. And this needs to be somewhere controlled. There has been a circular on this, but more needs to be done. And lastly, is there a mechanism to obtain clarification on the issues the industry has been facing? The advanced holding mechanism, which was hoped as a panacea in GST, that we will get a lot of clarity from the government, is not something which really worked with the authorities, with all the advanced holding giving more in the clarification or deciding the issues in favor of the tax authorities, and hence the mechanism did not work. But there was another mechanism which was set up of a sectoral committees, where a lot of effective work was done and the good clarifications were issued. can the government ensure that these sectoral committees are revived and they become a permanent feature? These are the issues and points which I had. With this, I hand over back to Dhanashree. Thank you. Thank you for the patient listening.
Thank you. Thank you, Karthik, for discussing the key open issues of GST. And if we have any questions, then we can have it now. Vishnu, do we have any questions?
We do have a couple of questions. Uh, the first one is GST helpful to drive economy compared to the before tax procedure? Uh, Anyone can take it. Payal, Karthik, how would you?
No, I would say the GST has definitely been beneficial to the companies. Okay, is it something which is perfect? The answer is no. It is not yet perfect, but a significant work has been done. A lot of tax credits and the certainties has been provided. So yes, definitely GST is helpful, and what we would want to see that we have made progress in 5 years. Can we accelerate the pace of this progress and be very close to what our ideal GST should be?
So just to add to what Karthik said, because we did discuss the pain points that are there today in the compliances. But while we say that, the way the responsibilities have been put, it's largely to plug in any kind of non-compliance or non-tax payments, and we are not encouraging businesses who are not compliant or kind of are not kind of contributing to the growth of the economy by paying taxes appropriately. So that's something that GST has got onto the table. And I think one aspect that needs to be addressed and which will be addressed because the government is working towards it is the niche industries which are now coming up, like cryptocurrency or online gaming or things like that. If that also they address, it will definitely be a booster for contributing to the economy. So it has been, we've been seeing the revenue, GST collections have been growing. So the contribution by the assessees are there. And I think definitely if we reach to the expected state that we have implemented GST with the dream, we will definitely, GST will definitely kind of be the backbone of our economy.
Oh, that's wonderfully put, Payal. I just have a discussion point here, which one of our viewers have asked. She said that many of the businesses has closed down due to a huge late fee and penalties and lack of understanding, due to which a short time is given for the compliances for filling returns. It is understood that the interest should be charged on late payment, but it is a bit cruel for them to late payment. How can we deal with this late payment kind of thing?
So, historically also we have seen in the pre-GST regime that, whenever there has been non-compliance, there has been a late payment fee, and which is there under the GST law also. But we have to be mindful of the fact that if there was a late compliance due to an unavoidable circumstance, like the COVID or the pandemic situation, the government has been mindful and has been extending. We know the GST audit dates have been extended forever. And still there was time when people said we don't have time, and there were like multiple extensions. So while we say this, there will also be a time when, there will be a composition scheme which will come, okay, which will kind of address a few of the challenges where, assessees could have genuinely not been compliant and genuinely are not in a position or the financial capacity to pay the late fee. That will be handled. But in my view, the way in this pandemic, the compliances have been handled and the delays have been accepted. There have been, that's a kind gesture, right, with the situation. I know that, there are a few businesses, because we have a lot of rural population in our country which does business, which is very raw. Kind of going to the technology way is a very difficult thing, and they were initial hiccups to do that also. But it's the need of the hour that, we kind of raise bars and learn. If you have a simple computer at home, you'll be log on to the website and pay the compliances. But I understand there is a part of India which is rural, which is raw, and which needs to get upgraded. I don't know how that will be handled, but the majority of the businesses are in metro, the larger businesses, and they know how to use technology to do compliances. So that's something which has been taken care by the government in a difficult situation. But you need to step up also. Yeah, globally things are moving technology. So that's
Correct.
you and I are also learning it. So something we need to upgrade ourselves.
Absolutely.
Sorry, Karthik, you want to add something?
No, I think even in pandemic, government actually brought in some schemes to clear entire backlog. So yeah.
In fact, while we speak also, there is a recent amendment which says that a certain period will be excluded for the time limit for filing refunds of around 1.5 to 2 years. So, that's an additional benefit which is being given. And so government is mindful, but yeah, the rural India is something that, everybody will have to think how we kind of plug that. But people in metros have to be mindful of the fact that the government has done things which has kind of helped them to do the compliances.
I have one question, Pal and Karthik. See, India is all about MSMEs, right? And somewhere there's a school of thought that people feel that there is a stress on their working capital, because of GST. Maybe it's a wrong notion, right? How is that we clear this out, or what is that can be done by the government? Maybe in terms of incentivizing or creating the right ecosystem so that people are encouraged to comply and they understand the true essence behind it. I know it's a larger point and a very micro technical point, but this is what I would like to table and have your view.
There were some schemes during service tax regime to allow very small providers to pay tax only when you recover the money. Now, if you introduce all the schemes here in GST, where everything is linked to each other, the entirely portal related compliances, everything, I mean, what is typically going to happen is you are breaking the entire chain and you are sort of defeating the whole technology. So that becomes difficult. And another challenge for MSMEs here is this very specific provision that if you don't pay tax, the customer does not get credit. And all the large businesses, to ensure that they get their credits on a timely basis, they have been very much focusing on the compliances of their customers. And in many cases, if the customer is not compliant or till the time he does not comply, do not pay him the GST component of the invoices, again leading to larger working capital requirement. So to some extent, there is going to be an onus on even the MSME to be largely compliant.
We have 2 more questions. We'll just take.
But I mean, yeah, you are right. There is no getting away from this particular issue. How do you help them in working capital?
Correct. We have 2 more questions. I'll just read them out. So first one is by Mr. Jain. He's mentioned that can you stress on a point that trigger intermediary service or checklist for intermediary service?
So in intermediary services, when we say this, it's a very very huge topic and it can be discussed till the cows come home. But the point is that there is a thin line as to how you maneuver from business outsourcing and to intermediary. And that has been addressed in the recent circular, 2021 circular by the government, that these are the parameters, where you qualify as intermediary and where you don't qualify as intermediary. I think if you have documentation enough to show that it's an outsourced service and not a tripartite service where, you are doing something on behalf of somebody else, where you're acting as a liaisoning agent. That's the crux. It's a tripartite. A liaisoning person is somebody who qualifies as intermediary broadly under the concept, under the GST regime. If you know that you're not that, or you're not the person who is a facilitator or a communicator between the two parties, then you're not intermediary. Then all you need to do is scope your service right in your documentation.
I think let me just continue from what she was saying.
Yes.
The entire part of intermediary is very much documentation on your fact schema. While the principles have been laid out in the circular, you need to be very clearly be able to document it in your intercompany agreements and also show them by your conduct. It cannot be only that there is something which is written in the agreements and your conduct is something else.
Yeah.
So intermediary, it's a very, very tightrope walking. When you say it is intermediary, it is not an intermediary, and a lot of things will have to be done. This is the respective fact of the matter.
Okay, Karthik. We just have one last question. That is, it says that pop-up is denying the ITC credit in 2A and 2B. Is this denial a loss, or how to overcome this challenge?
Sorry, can you just repeat? Oh.
Pop-up is denying in ITC credit stated in 2A and 2B. Is this denial a loss?
Can that
It's
the person who will ask the question be more
Yeah.
specific? What exactly pop-up we are talking about?
So they've not mentioned that, sir.
I think if that's the case, that person can articulate the query in greater detail, share it with us, share that query with us, and
Sure, absolutely. We can do that. Yeah. So yeah, we do not have any further questions. So we can move to the vote of thanks. Yeah.
Time.
Yeah, I know that we've exceeded our time, but I'll just take a couple of minutes to say the vote of thanks. It's a great privilege and honor for me to give a vote of thanks to this August gathering. First and foremost, on behalf of IACC, I would like to thank the audience for taking out time and giving us such an overwhelming response to this digital session on a Monday evening. I express my heartfelt gratitude to our knowledgeable speakers for today, Payal Thakkar and Mr. Karthik Solanki. Thank you so much for sharing your insights on GST during this session. A special shout out to my teammate Dhanashri for devoting her time and efforts for executing this session wonderfully. Lastly, I would like to thank Mr. Saurav Shah, President IACC West India Council, for conceiving this outstanding session. Once again, I thank everyone for your attendance. Now, with the permission of the dignitaries present here, I would like to officially conclude this program. Thank you so much.
My apologies, I got disconnected. I'm so sorry.
No worries.
Yeah. We have a couple of questions lined up, but what we'll do is we'll share the questions to you and we can write them individually.
Yeah, share the questions and we can.
Yeah, that will be helpful.
Sure. Thank you so much. Thank you.
Thank you so much.
Thank you for having us.
Thank you very much.
Thank you.